14 of 21 series are aligned with acceleration strong this morning. That is broad agreement across the framework's macro map. The current macro regime is acceleration strong with a confirmation score of 17 out of 21. The macro regime means growth momentum is accelerating at plus 0.11, and inflation momentum is accelerating at plus 0.00. The coherence score is 17 out of 21, and the confirmation score is also 17 out of 21, which places this reading in a moderately confirmed zone by the framework's own historical record. Over 3-month periods, similar confirmation levels held in roughly 47% of observed instances. Compared with last week, the Atlanta Fed's GDP tracker improved over the past 2 sessions, while the regime's broader alignment remained stable. Across markets, this kind of configuration has historically coincided with firmer commodity action, pressure on longer duration bonds, and renewed attention on inflation-sensitive assets. A record of past behavior, not a forecast. The 10-year Treasury yield is at 4.69%, and that sits in the framework's red zone for rates pressure. The label is red because the level is above the 4.45% threshold the engine tracks as an important historical pivot. In our framework's reading of comparable periods, this roughly coincided with inflation composites strengthening and rate-sensitive equities coming under pressure within the following several weeks. An observation under our methodology, not a forecast. What markets watch here is simple. When yields rise, discount rates matter more, and that changes how investors think about duration, valuation, and the cost of capital. Labor is the softer signal in the morning tape. Non-farm payrolls are the weak point, and the framework marks that series red, meaning unfavorable momentum from slowing job growth relative to prior readings. In our framework's reading of comparable periods, this roughly coincided with lower rate hike expectations and more cautious cyclical pricing within the next few weeks. A record of past behavior, not a forecast. The question this raises is whether the labor slowdown stays isolated or starts to alter the broader growth picture. What would challenge this read is a re-acceleration in hiring or an upside surprise in employment breadth. Credit and volatility remain orderly, but not inert. The VIX is 15.45, which the engine treats as normal and still relatively calm by 2-year percentile standards. The label is green because it sits below the framework's stress threshold and reflects a 17th percentile reading. In our framework's reading of comparable periods, this roughly coincided with steadier equity tape and less urgent demand for protection within the subsequent weeks. Again, a historical observation, not a forecast. What markets watch is whether calm volatility accompanies constructive risk appetite or whether it masks a later repricing. If the fear and greed gauge were to fall below 15 for several sessions, that would challenge the current coherence read. Gold and crude are the most visible cross-asset tell this morning. Gold is higher and WTI crude is firmer, while the dollar index is also slightly stronger. The framework labels gold's move green at plus 1.40% and crude's move green at plus 0.95% because both are positive daily momentum readings. In our framework's reading of comparable periods, this roughly coincided with more attention on inflation hedges and real asset leadership within the following weeks, a historical pattern, not a forecast. The question is whether those moves reflect a durable inflation bid or a temporary adjustment in positioning. 2 triggers remain on the live map. If the 10-year yield crosses 4.45% and holds for 5 consecutive sessions, in our framework's reading of comparable conditions, inflation composites showed acceleration in 9 of 11 comparable cases. A historical characterization, not a forecast. That would sit inside the present acceleration regime and reinforce the current inflation lens. If the fear and greed index drops below 15 and holds for 5 consecutive sessions, the confirmation score deteriorated in 7 of 9 comparable instances, a historical characterization, not a forecast. That would be a regime watch flag inside a still active acceleration backdrop. The map is live. These conditions are being monitored daily across all 21 series. The Given engine is the automated rules-based engine inside Given Analytics. It does 2 things in parallel. First, the Given Engine publishes a view of the macro environment, the regime, the confirmation score, and the historical base rates already measured. Second, the Given Engine runs a fixed 4-layer mathematical framework: price structure, rate of change, risk regime, and market participation across 407 liquid symbols every trading day. When all 4 layers agree on a symbol, the Given Engine records it as an upside-aligned or downside-aligned condition under the framework, a reading of how the 4 layers line up, not a trade. These are time-stamped model readings, logged for members to study. The environment view and the condition log sit side by side inside the Given Engine. They are separate outputs. The regime does not pick the symbols, the 4 layers do. Members use the Given Engine to study how the framework has recorded conditions across prior environments. The Given Engine runs the framework. You study the outputs and environment. You decide what to do next. Every trading day, this is free. Watch real symbols go active in live markets at the price it's happening, see which sectors are leading, and learn to read what's driving it yourself. That live view is the observation desk. The same 21 series and 407 symbols founding members study each morning, the environment underneath every move. If you want to watch it alongside us, the live view is at givenanalytics.com. Free to try, no credit card, for the first 500 founding members. Watch it before you risk $1. You decide.